Hi there. What's a stock split? And why is Tesla doing a stock split? I wanted to jump in here and do a quick video lecture and discuss the most recent press release on Tesla 5-for-1 stock split, and also open up and update the financial model that we put together several weeks back, where we arrived to a $2,200 price target and updated to come up with a new stock split adjusted price target and share that process with you. In addition to that, if you haven't seen that lecture video, I recommend that you watch it so that you can understand our thought process, the mechanics and the formulas on how we came up with that $2,200 price target. And also, if you're new to our YouTube channel, don't forget to subscribe and turn on the notification button so that you're one of the first to receive an alert every time we upload an educational lecture video like this one. So with that being said, let's get started. What is a stock split? Simply put, a stock split is one of the mechanisms that a company can engage in and use to issue more shares to their shareholders by granting additional shares. Now, why would a company decide to split their shares? Why would they announce a stock split? Well, there's several reasons why they would do that. The first reason could be to make their stock price more attractive to the general public and bring in additional interest or additional shareholders and investors. The second one can be to increase liquidity by granting more shares so that their stock, the volatility becomes less and the increase or decrease are more gradual. It's a stabilizing mechanism. And I'm sure many of you that own shares of Tesla, you've seen Tesla stock price increase 5 or 10% in a matter of days. With more shares outstanding, that process would be more stabilized, more gradual. And here's the caveat. There has been rumors or speculation that Tesla now will be added into the S&P 500 because they meet their criteria. I think that they're actually doing the stock split to increase their shares, creating more liquidity in anticipation to them being added to the S&P 500. Because what happens once they're added into the S&P 500, the buy side, fund managers, billion-dollar hedge funds will have to buy Tesla shares, and also the index, the ETFs that mimic the S&P 500 will also have to buy Tesla shares, which is creating a demand. So in order to meet that demand, one of the ways to satisfy it is through a stock split. Now, let's review the price target that we arrived several weeks back on Tesla, where we projected a $2,200 price target. Now, how do we update and adjust our model to give us the new price target on a stock split adjusted basis? So let's focus our attention on our screen and look at our financial model. Now, what you're getting to see here on our screen is a simplified version of the income statement that we used several weeks back to come up with our $2,200 price target. As you can see down here, the highlighted cell on row 32, 2198, we simply just rounded to $2,200 as our projected price target for Tesla. Now, what would be the new price target on an adjusted basis? So there's a few things that we need to do to update our model. The first one that we're gonna do is adjust the share price. You can see it up here in row 12. As of August 15th, their stock price was $1,650. This was their closing price. To adjust it, stock price adjusted for a 5-for-1 split. And let's anchor this. Divide this by 5. And here's the number that we get, $330, which means if Tesla were to do their 5-for-1 stock split today, their new adjusted share price would be $330. Now, if you see down here on a valuation stamp, from a valuation perspective, using sales multiple, we came up for 2021, we came up with a $2,437 price target right here. Now, what would this number be on an adjusted basis? Well, we first have to adjust their shares outstanding. As of their most recent quarterly filing, their shares outstanding was approximately 186 million. Now, let's adjust this number to represent the newly issued shares. Okay, so I'm gonna add a row right here, and I'm gonna type up shares outstanding on a 5-for-1 split basis or split adjusted basis. Multiply this by 5. And here is the new adjusted shares outstanding for Tesla after August 31st. It would be 931 million shares. Now think about it. With speculations of Tesla being added in the S&P 500, this would create demand for their shares. Now with the new stock split, the demand that they will be facing from ETF, from funds that mimic the S&P 500, and also the mutual fund industry that would have to buy Tesla and increase their exposure, that demand will be met with the new issue shares. There's gonna be enough liquidity for the stock, all right? So let's adjust for our new implied price target. So down here, I'm gonna create an additional row and adjust this. Adjusted price target on a 5-for-1 stock split. Okay, so quite simply, we can take our equity value divided by our new adjusted shares. See, 325 for 2020. For 2021 would be 487, and for 2022 would be 628. We could have arrived to the same number if we would have taken our previous price target or our previous implied share price and simply just divided by 5. Let's do that little exercise, right? So let's just come here and take equals, take the 1627 divided by 5. For 2021, take the 2437 and also divided by 5. And then the next year. And you see that you arrive to the same implied share price. Now, their shares outstanding will also adjust their expected earnings per share. If we look up here, as part of the income statement line items, earnings per share normalized, they're expecting to generate $8.70 for 2020. The street was also expecting $15.55 for 2021, and the following year, $22.99. These numbers will now be adjusted. You will divide them by 5 to arrive to the newly adjusted earnings per share estimates. Let's do that simple calculation. So earnings per share, EPS adjusted on a 5-for-1 stock split. So take 2020 earnings per share, what they were expecting, and divide this by 5. And that gives you $1.74. Then I'm just simply going to drag this across. For 2020, you could see $3.11. And for 2022, you could see here would be $4.60. Now you can use these earnings per share number to arrive to a price target by simply multiplying it by an expected PE multiple. As we did down here, valuation on a PE basis. This whole section down here. And using PE multiple, these was the price target that we arrived with. So what would be the new price target if we were to use PE multiple? So I'm just simply going to divide my previous price target by 5. And I'm just gonna link this so that I don't have to type. Take the price target of 1848, divide this by 5, and just drag this formula across to the right. And you can see that for 2021 on a PE basis, we would arrive to $391. Then the following year, $359. The decrease has to do with the decrease in our PE multiple valuation that I'm using right here. If you want to try this yourself, just coming up with a simple PE multiple, the way you would do it, just take your PE multiple, and what would determine the PE multiple would simply just be based on the growth of earnings per share. I've explained this in previous lectures, so if you haven't seen those lecture videos, I would recommend that you go and watch one of our stock analysis where we go a lot more in depth in explaining this process. So PE multiple, let's just say 100 times. Just gonna copy this format, and let's say 100, okay? Let's take our newly adjusted earnings per share number. Just gonna link this so that I don't have to type it. Link our adjusted EPS down here. And this would be on a dollar basis. And then my new price target on a PE basis, price target on PE basis, would be your EPS times your PE multiple, in this case 100. Drag across, and you can see here what would the price target be. But of course, the price target is not based on 100 multiple in our example. If we use the multiple up here, 126, look at the price target. 391, which is the same 391 that we had up here, just simply dividing the previous price target, okay? And let's move this over to the right, and let's drag it and actually copy the same multiple to the left for 2020. And you can see that it's the same number, folks. So you're simply just adjusting the stock by dividing the price target that I had by 5. It's a very simple adjustment that we're making. Now, what becomes, or what will be the new price target for Tesla after August 31st, depending on where the stock price closes? Well, maintaining these assumptions, let's see here. Earnings per share growth, 79%. If we pay 1.6 times that growth rate, we arrive to a 126 PE multiple. The price target will be 391. I'm still okay with these assumptions. I'm still okay with this new price target. So let's come down here and link my expected price target on an EV over sales basis. Do the same thing on a PE basis. I'm just gonna take a blended approach by taking the median of these two, and I arrive to a $439 price target, right? Let's just round, $440. This would be my new expected price target on Tesla after August 31st on a stock split adjusted basis. Currently, the stock it closed at 1650, but if we adjust it, it will be 330. On August 31st, assuming that the stock is still 1650, obviously there's gonna be volatility, but just for examples and with all intended purposes, let's assume it's 1650. That is the equivalent of $330. Then what would be my return on using my current price target or my potential upside? I'm gonna take the 440 divided by 330 minus 1. That represents a 33% upside on the stock. So I hope this gives you a perspective on how you would adjust your stock split, and also how we are adjusting our model so that we know what would be the new price target on the stock once they introduce their stock split. And if we look over here on our graph and apply the technical analysis perspective, here, you can see that the price target that we had previously of 2200, this would now become 450. And you can see that the stock is increasing, or actually increased the last several days in anticipation to the stock split. In anticipation, the other catalyst is the admission into the S&P 500, which will create a lot of demand. It will create a lot more buying for the stock. Then hopefully it breaks our previous resistance. This is technical analysis now, language that we're speaking, and it will increase and probably hit our price target of 440. This is how I'm analyzing the stock. So I hope this gives you a simple explanation on how we would adjust our numbers, on how we would adjust the current share price of the stock, why companies engage in stock split, essentially to increase liquidity, to make the stock more attractive to the general public. And it's just another form of marketability, marketing their company, marketing their stock to bring more investors. So with that being said, folks, I hope you found value and enjoyed this brief explanation, and I'll see you in the next one. Take care.